All right, welcome back everyone. So today we're reviewing the trades for the week of January 6th to January 10th, 2020. So once again, we're beginning this week with our account balance at $351. Let's go ahead and review the first trade, which happens to be so far my biggest profit in this small account challenge, and this takes me to 2 for 2 on the year. So far my two first trades of 2020 are some pretty good profits. Let's go ahead and review this trade right here. Let me pull up the chart. Alright, so on this day, this was one of the leading gappers, CTIB, and its float is 1.9 million and has a market cap of 9 million. And on this day, it didn't have any news. All I saw was that it was on my scanner, and it was getting some momentum right here. I saw it spike, but I didn't chase it into a spike. I wanted to see it pull back and consolidate for a bit and then break the high of day. Again, that's one of my patterns right now, which has brought me some success, which is buying the high of day break. Let that initial spike take place and then pull back and then buy the break of the high of day. And that usually happens within the first 30 minutes of the market open. And they work very effectively with low float stocks specifically. And so again, I let it spike. I bought the high day break. My entry point was $1.36. So I got in right here on this candle. And I got in with 250 shares. And I was looking for it to break 163 because that's previous resistance right here, as you can see on this daily chart. So I was gonna sell half into this, but then it got halted on this candle. You see, it's at 6:38 in the morning right here, 6:38, and then this candle is 6:43. So it got halted for 5 minutes. And I think I actually did sell. Yeah, I sold 100 shares going into the halt, and I got filled at 183. So automatically in 1 minute, I took profits of about $50 or so. So by selling 100, I took $50 of profit, and that's a strategy that I'm trying to use so that I won't be cutting my profits short. I want to maximize my profits. So the strategy is sell half of your position into a spike, and then hold the rest of it. So the way you manage that is when I got in right here at 136, my risk was the low of day 106. You could set your risk at 114 or the low a day, but at that point I was just thinking quick. I set my risk at 106. So I was risking 30 cents to make I don't know what was the exact price target that I was looking to sell, but I knew that it was gonna be for sure passing the resistance of 163. So automatically that right there, you can say it's 1 for 1, but not knowing what's the next price target to hit after 163. It could be 2 to 1 or 3 to 1. If you want to see it as from where I sold, which was 50 cents higher than where I bought, then you could say, I was risking 30 cents to make 50 cents. That's already 3 to 1. Or 2 to 1 maybe. And so yeah, so back to how to manage it. So once I sold into this, my risk is no longer 106. After I sell my half of my position, I move up my risk to break even. So that right there ensures profit. You can't lose. You already took profit by selling half of your position, and now your risk is at break even. If worst case scenario, it drops back to your entry point, then you get out and you stay with the profit that you took when you sold half. So back to the trade. It resumed from the halt, and I immediately sold just like that. I didn't wait for anything. I just pressed the sell button, and I got filled at 204. You can see that after that, I could have got out maybe at 230 if I was a little more patient. That would have gave me a total of maybe $200 profit. But I just wasn't patient enough to let this thing work and to stick to my plan, which was set my risk at break even. If I would have stuck to that and not sell until it gets to break even, I would have made at least about $500 on this trade, because it never went back to my entry point. I would have probably just ended up selling around the threes. And later that day hit 414 and dropped, but yeah, it was a pretty good trade. I just think I need to work on my patience so that I can maximize my profits. Which is something that I need to focus on. I need to focus on trading only A-type setups, good quality setups, and let my winners run. But we're getting there. Not every trade is gonna be like this. You're not always gonna see a home run. But it was a pretty good trade. Just need to work on my patience, like I said. Let's move on to the next trade. It's a loss. Unfortunately, my next trade was a loss. Let me pull up the chart. Again, I'm filming this almost a month after. I haven't been consistent with recording my trades on that same day. I traded on January 8th, but that's something I'm working on as well. I've been pretty busy most of the time, but I'll catch up though. So BIOC, I think it was on this day. Yeah, I was looking for this breakout over the previous day's high, because the previous day got up to 40 cents, and I saw this big gap, so I thought it could at least hit 50 cents. Now it's a low price stock, so I was buying with 1,000 shares at 46 cents. I got in right here when it broke the pre-market high. And the thing with these low price stocks is that you don't have to wait for 20 to 30 cent moves like on the other higher price, because you can buy with more shares. So my position cost me 460. I was in with 1,000 shares. If I would have sold at 49 cents, I would have taken a $30 profit, and that's not bad. With a small account, you're gonna grow the account by taking consistent base hits. You're not always gonna be making 100 or 150 or 200 every single trade. Those are home runs. Home runs, they come here and there, but the way to do it is to take consistent base hits and to keep your losses small. So in a small account, with considering my small account, which is a $500 account, a solid base hit is maybe like $30-$40. So right here, I should have just taken the quick base hit, $30, and move on. But I wanted to see it. I just wanted to see it run because I just came from having a big winner, and that's one of my mistakes, that I'm expecting all the trades to be like that. Keep in mind that I'm a beginner trader myself, so I'm making a lot of common mistakes that newbie traders make, which is not taking profits quick sometimes when the price action is not right. So I should have just taken this solid base hit and moved on. My exit was 44 cents, which was somewhere down here when I saw it break this pre-market high, and I took my $22 loss, which is okay. It's still not a profit, which I'm looking to make. I'm looking to make consistent profits right now, but it's a small loss compared to the big hit that I just got on the previous trade. So that's that for that one. Let me move on with the next trade. Next trade was another loss, and this one hurt. Let me pull up the chart. Let me show you guys why this one hurt. This one hurt because I was watching it the previous day. This was actually one that I had on my watch list the previous day. Let me show you guys my watch list for that day. 110 right here. So this is on the 10th. You can see right here, it was on my watch list. And look at what I said on my plan. To buy a break over $3.43 or a red to green move if it gaps up. Let me back it up real quick to where the day was. So this is right here. This is the 10th. This red candle right here. So when I made my watch list on the night before the 10th, which is on the 9th, it was this big candle right here. And again, I said on my plan was to buy a break over 343, which is this area right here, or to buy a red to green move if it gaps up. So it gapped up, and it did manage to break over 343 area. But if I'm not wrong, let me see my trade. I think I bought it late. Yeah, I bought at 3. What is this? Oh, I'm not even on the right thing. Hold on. Here we go. Yeah, this is 10. Okay. So this line right here is 343. And what is 10? So here's my mistake on this one. It's that on this day, I wasn't even watching. It was on my watch list the night before. But the next day when I woke up, I didn't even have it on watch. So, my mistake is not that I wasn't watching it. My mistake was that I was watching a different stock. Now I'll show you guys the chart on the other stock that I was watching, which would have been another home run hit if I would have stuck to my plan on the other stock. So I look at I was watching this stock, and again, you need to be patient. These don't move fast all the time. Most of the time, you're just waiting for it to hit a certain price that you're looking as your entry point. So I was waiting for this stock to hit this certain price, and then I look over to my scanner, to my top percent scanner, and and I see TRL hit the scanner, and it was at 375 right here. It hit 375, and I was like, wait a minute, like I know I have TRIL on my watch list for a break over 343. It's at 375. Oh my god, this is gonna run up. Let me get in. That's what I was thinking. So I quickly, I was watching the other stock, and then I quickly I quickly click on TRIL. The chart pops up, and as soon as it pops up, I'm seeing this. So I'm like, great, let me get in. I got in on this candle at 641. Did I? 642. So I got in on this candle right here. Look at this. I got in right here. I was like, yes, it's going up. So I can feel 375. It jumps a little right here. And then as soon as I get filled, boom, starts dropping. And I was like, oh, wow, what a bummer, And let me pull up the so again, I had got in with 125 shares on this one at 375. I sold at 341, somewhere in this area. Took that fat $40 loss. And CPAH, this is the one that I was watching on the 10th right here. Look at this. I was watching CPAH for the high of day break because I had saw it do this. Let me zoom it into where I was watching that time. I had seen it spike. I didn't want to chase, so I was watching. I was watching it come down. It was doing this. And then at this moment, at 641, when it topped out right here, that's where I took my eyes off of it, saw TRIL, clicked TRIL, and then look, it didn't cross it, but I was already in on TRIL. TRIL was coming down, and then I ended up getting out on TRIL around 646, 647. And as soon as I get out of my position, it does this. It just runs up. It runs up. Well, I was at this point, I was swinging at the air because I was like, wow, like I could have got in on this with 200 shares at 170-ish, 180. I could have been up at least over $100 on this one in 10 minutes if I would have just stuck to my plan, which was buy the high day break on this stock. So, but yeah, I mean, that's the thing with newbie traders is that we fall for FOMO. We don't know how to control our emotions, and we just jump around with stocks that we see running. Focus on one stock at a time. Focus on one penny stock at a time. Make your plan, and then just stick to that plan. If you see another thing run, you're always gonna see stocks running, but you need to stick to patterns that and stick to your plan. If you see another one run, and then let's say, for example, this would have never worked out, and I would have seen TRIL, the correct way to think is like, all right, like, so what? So what if this fails and the other one works out? I'm not gonna just chase into stocks, but you live to trade another day, and you walk away. If it wouldn't have worked out, you just walk away with no trade at all. Sometimes no trade at all is better than a losing trade. Sometimes the best trade is just no trade at all. But yeah, I mean, I'm learning how to be disciplined and stick to my plan. So I ended this week with my account balance at 442. Even though these last two trades were losses, I'm still walking away with a profitable week. I'm profitable this week by $91. So $91 profit week. One of my best weeks that I've had, just because I had that swing trade. I could have been up almost 200 on the week, or maybe even more. You know, if I would have never cut my profits short on CTIB, and I would have managed to get this one right. You know, I could have been up maybe 100% on my account. But we're learning. We're learning. As you can see, I'm getting a little better. That's it for this week. Again, if you like the video, give me a like. If you want to keep watching, hit that subscribe button. If you have any comments, you know, I'm open to feedback. You know, if you think I suck, let me know I suck. If you're a better trader than me and you have some advice, you know, just drop it in the comments. Thanks again for watching, and see you next time.